Hey guys, what's going on? We're gonna do a simulation session today. We're gonna talk about price ranges and the daily opening price. So both are important in trading, right? Let's pick a random date first, so we know we are not cheating, right? So 2019, 28th of February. So we'll probably start on 1st of March, depending on which day it is. So let's go to new simulation. Let's go. Yeah, GU is fine. What was the date again? Already forgot. 2019, 28th of February. 2019. February 28th is in the middle of the week, so let's start on a Monday, 4th of March. That's fine. Right, so let's remove the spread so we can accurately get entries and stuff, so without worrying about spread. So no spread. Let's do 100k, just like a FTMO challenge, right? And a little bit of commission, that's fine. Let's pull up the charts. We're going down from monthly all the way to the 5 minutes. So top-down analysis. The one perk from doing simulation that's you don't have emotions, right? So when you're in a trade, it's way easier to hold or to get in somewhere. So that's always something you gotta keep in mind when you're doing simulation. One downside of simulation for me is that I cannot do inter-currency correlation. So normally I use DXY and Euro GBP for my correlation, but I cannot do that right now because we can only see one pair. But we'll have to work around that, I guess. So no SMT and that kind of stuff. So right, let's go to the monthly. What is happening to the monthly? The monthly obviously is bouncing off a bullish order block. What is the draw on liquidity? Well, obviously we need to go to imbalances, right? So this imbalance is for me on the monthly perspective, right? That's the draw on liquidity. So let's put a line on it. And let's make it blue for the monthly. Right, so now we have that line. Let's go to the weekly. What is happening on the weekly? So we liquidated this low over here and bouncing off a weekly. This is actually pretty good for a bullish bias. So we have this unmitigated order block, right? So this is good. So this confirms our narrative that we should head into this area. Now let's build on price ranges, right? You gotta use the fib tool for that one. So take the last high to the last swing low, and we can see equilibrium. So the midway point of the range is here. Everything above it is premium, and everything below it is discount. So we want to be a buyer in this area, and when it hits this area, we're gonna look for sells. So it makes sense, right? Because this is a weekly time frame, so this can take a while to get here. But this is the big range we're trading in right now. Now we can make another range right now because you go from swing low to swing high and vice versa, right? So let's take the bodies for this one. You can see from this swing low to this swing high, we touched OTE, the optimal trade entry, right? And went up. So right now we're creating a new range. So remove this one. Right now we are in, if this is the high, obviously this is the new range. Why am I using the wicks right now and not the bodies? I am not sure if we're gonna trade higher. So if I anticipate this is the high, I will use the wicks right now. So OTE and the perfect trade entry is around this area, which makes sense, right? This is a weekly fair value gap. Also a balanced price range. If you don't know what that is, then probably I'm gonna explain it in another video. But yeah, so I'm expecting this week either to trade down into this imbalance and move up around here, or we're gonna trade straight up into this area and then move down further, because we want to be a seller up here and a buyer in this range, right? So let me quickly copy this fib for the lower time frame, and then let's make, if we look at it like this, right? So this is the premium area. Let's make it red, and then this is the discount area, so let's make that green. Right, so this is our trading range on the weekly time frame. So we're still in the discount area, and we want to get into premium before we want to sell. So higher time frame bias right now, we've established that, right? Price ranges, we have a smaller range in here. So if I do it like this, right? So this is discount, and this is premium. So let's make this one red again. Right, so price is fractal, which means you can have multiple price ranges in bigger price ranges, depending on the time frame. But this is the weekly time frame, so this is our higher time frame narrative. Now, when do I want to be a buyer? We wanted to reach this area, right? So I want to be a buyer when we reach this discount area on the weekly time frame. So let's go to the daily. So now we've got our, let me adjust this one a little bit, because it's not 100% accurate. So from the low until equilibrium, and then we have this one from the middle point to the high, right? Now this is the price range we're dealing in on the daily right now. What makes the most sense right now? Obviously, on the weekly there's a fair value gap here. If you go back to the weekly, right? On the daily, we already entered a daily fair value gap and moved up. So what are the possibilities we're gonna trade below this daily fair value gap, right? We have to think about that. I think it's still possible, but I'm not sure if this wick will get taken out. So we have to see what happens during the week. As always, I don't trade Monday, so I want to see what happens. Let me copy this so we can see it on the lower time frame too. Right, now let's skip Monday, so we know what potentially the weekly profile could be. Right, so if we look at Monday, this is Monday. So Monday's trading, we traded above Asia a little bit, and then traded down. So it's leaving equal lows right now over here, right? So this is a target. So we can expect this daily, this next daily, the Tuesday, to trade lower. If this stays intact and we trade up at the first thing, we're going to look for sells, right? Because let's focus on price ranges again, right? We're in premium right now, so this is a sell area. And on the 1 hour, we're obviously on the sell side of the curve, right? You can see bullish PDRAs are being disrespected, and all the bearish PDRAs are being respected. So let's skip to true day open, and we'll use the daily opening price to frame our setup. Right, so skip, skip, skip. So now we're at daily opening, right? Asia session has formed. Now we're gonna get a line over here. Let's make it black. And this is our daily opening price. So if you use the daily opening price, you want to be a seller above it, and you want to be a buyer below it. And it depends on the narrative, right? You have to take into account the higher time frame narrative. Obviously, we're trading inside a fair value gap right now, so we can also go up a little bit. But you really want to be a buyer below it and a seller above it. So let's see how London session forms, and then we'll have some more information. Zooming out a little bit, this is on a 1 hour time frame, right? Are there any clear targets we can trade off? So we've got a small fair value gap up here, and this one already got touched, as you can see. Let me scale fix a little bit. Right, zoom in. Right, so let's go over the PDRAs, this fair value gap, bearish. Let's make it a little bit light gray because this is a little bit intense. So 1 hour fair value gap is being respected, right? Now we have another fair value gap up here. Let's mark it out. and we want to be a seller, right? Because we want to reach discount, and discount is down here, and we're on the sell side of the curve at the moment. So where do we want to sell, right? In the best possible area. First, let's see how pre-London forms. I'll skip ahead on the 15-minute. Right, so we're at London kill zone start right now. So we're trading below, hanging around. So we want to potentially be a seller up here, right? Because we want to trade above the daily opening price, and eventually we want to trade down. So let's see how London forms. Right, so we wicked up. Let me just let price breathe on its own. So this is London session, we're trading up. Where are we reacting from? So this is a 1 hour time frame, this is the 15-minute. Okay, so we liquidated Asia high right now. Right, if we took this high out, and looking at the lower time frame right now, even though there's a 1 hour fair value gap here, it doesn't have to go there. We can see this 15-minute order block is holding this price over here. So we just ran the liquidity up here. There's a tiny fair value gap up here. Let's see if this is the same price, by the way. So that's important. Yeah, it hit this also so tiny fair value gap. So we have a small fair value gap here, right? On the 15. And we touched that. So let's go to the lower time frame. We don't have to go in here, but we want to sell above daily open. Remember, right? We're above the daily opening and our bias is bearish. So let's go to the 5. Right, so let's skip ahead. Right, we're trading a little bit higher. Is there a change in structure? Right now we're respecting a bearish fair value gap, right? So this could be an indication we're shifting market structure. Now on the 15 we just printed one bearish candle, and the 30-minute did not do. It's the same for the 30. 30 has not closed yet, but we could potentially form the high of the session already. Now it would be favorable if I could look at the Euro GBP and DXY, but I don't have that luxury at the moment. So yes, we have a fair value gap down here too, so that's where price could potentially draw into. We have accumulation right over here. Then we have potential manipulation in London session. And now we have distribution down. So this would be a late entry. Normally I would enter in a fair value gap. It's 5 pips lower right now. So let's just assume this is the high of the session. So let's do a 1% risk. And then 15 pip stop loss. And then our higher time frame target. Let's aim for equilibrium. That's 110 pips. So let's do 100. Sell. So 15 minutes, 5 minutes, let's monitor what happens. Right, we're still closing below that fair value gap, right? Ooh, that's unfortunate. Now I'm wondering why are we doing this? Let's look at the 1 hour. Right, so what we just talked about, right? 1 hour imbalance hit, we're gonna go to another 1 hour imbalance. So I'm gonna give this trade another chance when we hit this area, and then I want to see a change of structure. Right, so we hit it. Now you want to see a change of structure. Right, almost forming a swing low. Right, let's look at price ranges right now. So we took out sell side liquidity and buy side liquidity. So let's put a fib on here. So again, this is our new range right now. We're trading up in premium. Price is most likely to head in this unmitigated order block back into the discount levels. So we have to see how price develops right now. So back into discount. Gonna see a small reaction upwards probably. But if we're leaving premium, there's a high chance we're gonna go down. So as soon as we start to leave premium, That's happening right now. We want to be a seller. Right, so we're trading down. For me, it's pretty obvious we're created the high of the session, right? So we talked about this 1 hour being potential sell area. Now this would be a late entry, but on the higher time frame doesn't really matter. So what is the most logical thing to do? The entry was earlier on the 1 minute probably over here on this bearish order block, right? So actually losing in simulator is better than winning in my opinion, because you can read what you did wrong, right? In this case, we didn't do anything really wrong, but we could have entered over here in this fair value gap, but then our target was smaller. So this was actually the target for on a 5-minute perspective, and on a 1 hour we talked about this fair value gap could be the draw and then move up into this one. So that happened. Now we're seeing clearly it wants to shift structure. So this is a late entry. Let's put our stop loss around over here. So I don't think we will disrespect this bearish order block. So let's do 17. That's fine. It's still 1 to 6, 1 to 7. So let's sell and then let it run. Alright, so we have accumulation, right? Manipulation, and now we're trading down. So right now we already made up the loss, so that's fine. Simulation is not about winning all the time, it's about reading what you did wrong or where you can learn from, right? So that's why I'm doing simulations. Right now we're up 16, we were up 20 pips, so it makes sense to go break even right now. There's one fair value gap up here, so there we could return back into there, but I feel like we don't have to go back all the way up here. We have this breaker on the 15, so essentially our stop loss can still be hit, break even, because we have this breaker and it can trade all the way up in the upper part, but personally I would not expect it because we're already so low at these equal lows, right? So let's continue. Alright, so we're about to take the low. We're stopping right before the low, right? This is inducement for buyers, right? Retail buyers. They're thinking there's a support right now. Price will head back into a fair value gap and then move down. That's what the most logical thing. Right, we're stopped out. That's unfortunate. We have a clear target right now. Okay, so let's draw another price range. Right, because we have equal lows right now, so this is definitely a target. As soon as we hit this 62 level, I'm pretty sure we're gonna sell off. Let's look at the 1 hour. Yeah, it makes no sense to leave these equal lows right now. So I'm gonna do another sell for 19 pips. Yeah, 70 pips is fine too. So let's sell another one. So on this case, we have this 5-minute order block, right? Which should hold price. And we're disrespecting bullish price action. So we have the target determined, right? We're trading below it right now. We're up 30 pips, so let's go break even. Let's go to the 30. Let's go to the higher time frame, right? We want to, well, just let it run to equilibrium. And there's this order block too. So we're gonna scale off on the 4-hour fair value gap because there's a small fair value gap here. Whoops. New order, no thank you. So we have this fair value gap down here. We want to take a partial here. So this is, what price range is that? 31,256. 31,256. So price will stop when we're over there. Let's scale fix this. Alright. So let's do the take profit inside the higher time frame target, so down here. Alright. So now, how are we going to determine where price will go and what's highly likely? You can again use a range projection with a Fibonacci. So right now we've determined, right, this was the optimal trade entry, this was the low of the range, this is the high, and now we're gonna do standard deviations, right? So let's copy this 4-hour fair value gap. I'm pretty sure it should be around, yes, so this is, it's called flow 2, but it's something different. I backtested something else earlier, so let's let it run because it's pretty obvious we should go bearish. Alright, so this is a perfect area to take profits. We're up 3.5% right now, right? So let's close 60%. Right, so we have 1300 floating, which means we're up 1% right now. And this is only one day, right? This is on a Tuesday. So the day is still good at the moment. What was the ADR saying? We're almost hitting ADR, so potentially the range can be kept over there. But we want to head into this fair value gap, so that's our final TP. And we'll just let it run right now and see where we head into. Let me fast forward price a little bit, otherwise it's gonna take a little bit long. So we kept almost at the ADR, right? What are we creating right now? A new price range, right? So let's put a fib on this high. This is where the move happened from. Oh, this is an extension, this is the wrong one. Let me remove this old fib and then put a new one on, right? So we have a new price range right now. So let's mark out discount, right? Discount. And then we have premium up here. So as soon as we're in premium, we should sell off if the higher time frame is bearish, right? And this is a 50-minute. So what does it look like on the 1 hour? It makes sense, right? Because there's a 1 hour order block and fair value gap. So this is a high probable area where we should sell off. If we go to the daily, what is the daily looking like? All right, so we filled in this full imbalance, this liquidity void. We could have a little retracement on Wednesday, but I still think we should draw lower back in this weekly range, right? Like we talked at the beginning of this simulation session. So we're in New York session still. So we're right now in premium, right? So according to these price ranges and the narrative, we should head down right now. So let's risk 0.5%. So we're not gonna spoil all our profits, right? We're gonna do 0.5%, and then we're gonna put it above this price range, which is 25 pips. And then we'll write the rest down. And if it stops us out, then we still up 0.5% for the day, and then we have to call it a day, right? So what is our target? Yeah, around 110 pips still. So let's sell. Where the other one is break even. If we lose this one, we only lose 0.5% and we're still up for the day. So it's pretty late in the session. London close kill zone. So, right, so we're in a premium area right now, inside a fair value gap and a mitigation block down here. So this should be an area where you should sell off if we're bearish, right? We could, on the daily, could reject higher. Right, so let's see right now. We're up almost, no, we were up more than 20 pips. Yes, we were up more than 20 pips, so it makes no sense for me to not go break even. Because you don't want to go back in drawdown after it trades 20 pips in your favor. That's just my opinion. And this is an extra entry, right? So no reason to force extra entries. And we have these lovely equal lows here, so this should be actually a good target. You see how price, when it hits discount, you can see instant reaction, right? So this is the correct price range right now. So you have a 5-minute fair value gap. This should hold if we're bearish. Otherwise, we're going to take out our position on break even. So yeah. Let's move along a little bit quicker. Right, up 22 pips. And oh, break even. So that's fine, right? We don't lose anything on this position. And now we're getting stopped out break even on the other one too. So we're still up 1% for today. I would still say it's pretty good backtesting these price ranges, right? This is the direction you get from a 4-hour fair value gap, right? If we take another price range, potentially this is the new range right now. So so many ranges inside ranges, right? So we have to be really aware of what is happening with price ranges. Now you see, as soon as we hit equilibrium, right, in premium, we're starting to move down again. Now it's Asia session, so not a favorable time to trade. So let me just skip ahead. Right, so zoom out. But this is 4-hour range, right? Hit a little bit of premium and we're starting to move down again. What's the daily doing? Yeah, I think the daily still wants to go back down in discount. So let's see if we can get one more entry. Right, so this is 2-day open, New York midnight, right? So let's take this line and we want to sell above it, right? Important. If it doesn't happen, if it doesn't come above, I don't want to participate. Right? What is above? We have this liquidity up here. So let's go to the 30 minutes. There's actually a 30-minute fair value gap, which is also a balanced price range. So if we draw another range, we're going to draw another range. Right, so this is the new range. Let me copy this, makes it a little bit easier. Right, so from here to here, this is premium, right? And then this one, discount. And this is correct if we leave this low intact, right? So we want to trade up into premium and then move down. So let's put a limit order above these highs inside this fair value gap. Even though there are equal highs up here, which could be liquidity, I don't think we're gonna go that far. So this is 26 pips away, and then our stop loss will be 18 pips. So 18 pips. Let's risk 1% again. 26 pips away. Put in a sell limit, right? Inside premium, above liquidity, inside the fair value gap, which is also balanced price range. So yeah, this is the last trade we're gonna take on the simulation. High time frame draw should be still bearish, so and we want to buy below, right? Daily opening, this black line, and we want to sell above it. So let me skip ahead. Right, we're trading above, we're going into premium. We're accumulating, which could indicate an AMD model. Right, we're in right now, and we should move down. We should go break even right now because this is a new order block created, so we should let this stay intact. So let's go to trades. We're up, or we were up 13, 20, almost 30 pips, right? So let's go break even. And we want to hold our trade for these lows. So let's see what happens. If it stops us out break even, then it's fine. We're drawing out correct ranges, which is the purpose of this simulation session, right? I'm thinking there's some news or something because it's accumulating. So let's see if there's some news. 20 minutes, FOMC member speaking. It's late inside the session too, so. Oh, it's NFP week, guys. Yeah, that makes sense, right? So it's probably gonna consolidate. So this is actually not a not a favorable week to trade. I would not trade on what is this? A Wednesday. Yeah, after Wednesday New York Open, I will not. I never trade on NFP week. So yeah, let's see what happens. If we stopped out break even, then it's fine. Yeah, we're stopped out break even, so it's fine. It's late in the session anyways, and it's NFP week. I want to see what this NFP does. If we're gonna reach eventually this daily discount area and then move up. This one thing I want to see. Let's see if that happens. So I will skip higher time frame. Right, this is Thursday. So we're trading down, right? So our bias and narrative is still correct. Only the entry. We cannot do anything about this because actually it's funny because we talked about these equal highs, right? And that's being liquidated, and now we're moving down. So this is generated liquidity. We're almost at our target, right? Equilibrium. We're almost there. So pretty good read on the price range from this week. Right, the weekly we would have expected to trade into this fair value gap. My bad. So let's see what happens. This is Friday. NFP is in 4 hours and 30 minutes. So let's skip one more 4 hour and then let's watch the 15 minute. Oh, actually, let's watch the 4 hour and see if we can hit like this area over here, or the daily actually. So we went into premium already, or a discount. So I would say successful simulation, testing those price ranges. So let's see what NFP does. It's going to be volatile. 1, 2, 3, 4, 5, and then in 5 minutes NFP hits. So we hit target right now, that weekly fair value gap. That's great. All right, this is NFP. Not too much is happening actually. But I mean, CPI moves way better as of late than NFP. So this 62 is on this rejection block down here. So at least we should draw into this fair value gap. And eventually we can go deeper into this OTE levels, because this is liquidity too down here. Let me skip. I want to see what the daily does. Are we gonna move up from here? Let's see. It's beautiful, right? This is the end result. This is correct. Price range was correct, right? Weekly time frame, we determined this price range, this smaller price range in an uptrend, this bigger price range on the weekly time frame. We're gonna skip on the weekly one more time. I just want to see what it does when we hit this area. So weekly. We're actually gonna go down. That's fine too. That's fine. And actually, if I take the bodies from the weekly time frame, because I took the wicks, right? It was, yeah, barely equilibrium. So still good. It almost hit equilibrium. So this is of course a weekly range, so it's way bigger. But it was to be expected to take out these highs and then move down on the high time frame. Actually, beautiful price action. So guys, I hope you like this video on price ranges. I can go way more in depth on them. This was just my personal simulation session for today, and I wanted to share it with you guys. So If you like this video and you learned something, you can hit the subscribe button and the like button, of course, if you want. I have a free Telegram. It's on the screen, right? t.me/the OTE Trader. That's the link. It's called OTE's Chart Lab. So I do daily analysis there. If you want to see more videos, let me know. Send me a message or leave a comment, right? I enjoy doing these things. So, guys, have a great weekend, and I'll speak to you in the next video.